Charitable giving is a wonderful way to support causes you deeply care about and give back to society. Did you know that when you make charitable donations, you may also be eligible for tax credits that can drastically reduce your tax bill? In Canada, both federal and provincial governments offer tax incentives to encourage individuals and corporations to donate to registered charities. I will explore the ins and outs of charitable donations and tax credits in Canada, including how you can maximize your impact and potentially save thousands of dollars. Registered charities in Canada are tax-exempt to enable them to better serve their purposes and dedicate their resources to addressing the needs of communities. When individuals and corporations contribute to charitable organizations, they are indirectly funding the vital programs and services that these organizations provide. Government bodies recognize this importance and reward donors with tax incentives to encourage more giving, ultimately strengthening the country's social fabric. Canadian taxpayers can claim a non-refundable tax credit for charitable donations made to qualified recipients, which include registered Canadian charities, registered Canadian amateur athletic associations, the federal and provincial governments, certain educational institutions, and more. This tax credit reduces the amount of tax you owe and may even result in a tax refund. The federal charitable donations tax credit is calculated at two rates: 15% for the first $200 donated and 29% for any amount above $200. Most provinces and territories also offer a separate provincial tax credit, with rates varying from province to province. These credits are combined, providing a maximum tax credit between 40% and 60% depending on your location. To optimize your tax credit and maximize your impact, consider these strategies. Since the charitable donations tax credit increases with the amount donated, it might be beneficial to save smaller donations in order to give a larger sum in 1 year. For example, instead of donating $100 annually, consider donating $300 every 3 years to take advantage of the higher tax credit rate for donations over $200. Since the tax credit rate increases with the amount donated, it can be advantageous to pool donations between spouses or common law partners to claim a combined credit. This can help maximize the tax credit for the couple. If you're not able to claim all of your charitable donations in the current tax year, you can carry forward your unclaimed donations for up to 5 years. By strategically using the carry forward option, you can increase your charitable donations tax credit and maximize your deductions over time. Donating publicly traded securities or mutual funds directly to a charity instead of cash can eliminate any capital gains tax that would apply if you were to sell the securities first. This results in additional tax savings and allows the charity to receive a greater donation amount. To claim your charitable donations tax credit, ensure you have an official charitable donation receipt from the qualified recipient organization. Report your total donations on Schedule 9 of your T1 income tax and benefit return and calculate your federal and provincial tax credits. Keep your receipts on file in case the Canada Revenue Agency requests them. By understanding the ins and outs of charitable donations and tax credits in Canada, you can fine-tune your giving strategy to maximize your impact and potentially save on your taxes. So go ahead, explore causes that resonate with you and give generously, knowing that you're making a difference in the world while simultaneously saving money on your taxes.